Hi guys, welcome back to the channel. My name is Dave, and today we're talking about the S&P 500 index. In particular, VOO. That's the ETF from Vanguard that I like to buy and hold forever. I've done a review of that recently, and I'll link it up above if you want to reference back to that. But I kind of just want to talk about the S&P 500 index because we're down to this 41.31 range, which means we're below the 5-year average PE for this index. I think it's time to cast fear aside and start thinking logically about, is it time to maybe start picking up a few shares here and there? So, if that is what you're looking for, please stick around. Whoop. So let's start with a quick review of the S&P 500 index fund for those that are new to investing. So this is VOO. That's the ticker symbol that you can go buy. Has a really low expense ratio of 0.03%, and for doing that, you buy this ETF, and it's a basket of all these 500 stocks that are in the S&P 500. So invest in stocks in the S&P 500 index representing 500 of the largest U.S. companies. Goal is to closely track the index, which is considered a gauge of overall U.S. stock returns. So you get 500 stocks in this one ETF that you can buy with one simple share, and you can share in the U.S. stock market. That's the premise behind this and why it's kind of a go-to for a lot of people. You can also buy this as SPY. I prefer VOO with a slightly smaller expense ratio when I'm just buying and holding these types of ETFs. Now, if you decide to join me and invest in VOO, buy one share, you're going to be investing in the U.S. stock market. Clearly, this is 100% U.S. You're going to be buying tech, electronics, finance, health, energy, consumer, durables, and you can see everything right there. Those are the top sectors, top holdings: Apple, Microsoft, Amazon, Tesla, so forth and so on. And that represents, those top 10 represent 29%. So a pretty large chunk just in those top 10, but you're going to get a lot of diversification in all these other sectors as well. And with VOO, you do get a distribution yield of about 1.5% annually. So every quarter they're going to pay you off a small chunk of that back to you. So you do get a little bit of a kickback if you like those dividends. So not a huge number, but 1.5%. Now, the reason I wanted to talk about this, kind of get into the guts of what we're doing here today, is if you look at this chart, this is a one-year chart. We were all the way up to about $440 a share. You can now buy this for nearly $380 a share. So that's a decline of about 12% year to date. You can see the numbers down here at the bottom. So it's been quite significant. But over the years, this has done quite well. So is it time to invest into VOO? And I kind of want to start talking about that. Is it a good time to invest in VOO? Well, as somebody that's looking at the S&P 500 index, which is, approaching 4,000, and we're looking at VOO here, which is slipped now under 400. Remember, they correlate. It's kind of the same thing. So we're using VOO as our example because that's what we'd be buying. Well, I look at this one-year chart, and I start thinking about all the different concerns that are going on in the world, right? We have wars. We've got rising interest rates and inflation coming out of a pandemic. Pandemic news is rising again. Who knows what's going to happen there? So you're putting all these and you're trying to determine what to do. But as a passive investor, we're always looking for opportunities to buy. So I want to zoom out here and take a look at a 3-year chart. So you look at that 1-year chart and you're like, wow, it looks pretty good, right? But if I look at a 3-year chart that includes the pandemic year, right, we're going to see that we came out of that flying. And we went and made it all the way up to almost $450 a share for VOO. And now we've come off those highs, but it's not that significant when you look at a 3-year chart. So please keep that in mind as we work through this. There's still plenty of room below us to fall considerably. And still, as you zoom out again, you're going to say, wow, the market's performed pretty well. Because we look at a 5-year return, we're over 13%. Still pretty solid. So keep that in mind as you work through these numbers, that just because we've come off some, just because we've had a few painful days, doesn't mean it's necessarily time to buy yet. But when we start talking about the S&P 500, we do want to look at larger macro trends when it comes to the overall U.S. market. So we have all these different factors that we're thinking about. And if you look at this article here by John Butters back in February this year, you're going to see that the S&P 500 forward PE ratio falls below 5-year average for the first time since Q2 of 2020. So we're down here. This was back in February, and we're actually below that right now. So this was when the S&P was at 42.25. And this is a forward-looking PE, by the way. And now we're down about 18. So we're below this 42.25, and we could be headed lower. We could be headed to 4,000, like I said. We could be headed to 3,800. But I think this is the point where I want to start to buy a little bit because History shows, well, buying below this line is going to be good for us. Buying above this line isn't necessarily going to be great for us. So we want to time these things a little bit based on information like this. Don't get me wrong. I'm not saying time the market, but I'm saying looking at this type of information makes me feel better about my decision maybe to start investing some money routinely into something like VOO or the S&P 500 index. However, he also goes on to point out that while we're below the 5-year average for the first time in a while, we are still above the next 4 most recent historical averages, meaning the 10, 15, 20, and 25 year. And if you look at those as an average altogether, it looks like the forward PE is right around 16. So we could continue to fall. But again, we don't know. So this might be a good time to start adding to ETFs like VOO or some other S&P 500 index in anticipation, right? So could we go back, could we revert, or could we continue to go lower? We don't really know. So it might be a good time to start putting a little bit extra money into something like a VOO. There are also plenty of other articles you can find to support the downside, like this one from Bloomberg by Nikos and Michael. Bank of America's HeartNet sees pain and exit if S&P 500 dips below 4,000. So they're looking at inflows and outflows. 3-week outflows from stocks largest since pandemic started. U.S. stocks are poised for worst annual return since 1974. They're saying a drop below 4,000 index points for the S&P 500 will be a tipping point, which could potentially trigger a mass exodus from equities, according to Bank of America Corp strategists. So right now we're sitting at 41.31 on the S&P 500. We go below 4,000, and it's going to go further and further and further. Sounds like logical investing, right? Well, they do have plenty of good points in here, so I'm not making fun of this article by any stretch of the imagination. But I'm just, the whole point of this is if you buy a little bit now, if you buy a little bit after this comes true, well, you're going to be in a better position because over the long term, I think we're going to be sitting pretty good. So might be time to, again, add a little bit here and there. So investors have already started fleeing stocks with outflows from equity funds over the past 3 weeks, adding up to the worst since March 2020. Strategist led by Michael HeartNet said, citing EPFR global data. So scan down through the rest of this, and you're going to see it's all going to be tied to bonds as well. The average S&P 500 entry point for the huge 1.1 trillion inflows into stocks since the start of 2021 was 4274 index points, which means that pain and exit requires a drop below 4,000 points. The strategist said in a note on Friday. That's about 6.7 below the Thursday close. So if we go lower, it's going to go even lower. So global stock markets have been struggling this year as investors are grappling with fears of an outright recession and aggressive tightening by the Federal Reserve in response to surging inflation, down 11%, as we know. Bonds have been suffering the brunt of this year's investor exodus, and world government's debt is on course for the biggest loss since 1920, according to the BOF note. So keep some cash on the side, buy when it goes lower. Epic declines in bonds and stocks in 2022 reflect the coming flip by central banks from quantitative easing to quantitative tightening. They're no longer buyers. So, what do we do? So as a long-term investor, this is the type of opportunity that we should be looking for, right? S&P 500 index approaching 4,000 could go lower. VIX at 33, that's our fear gauge. It could go to 40, it could go even higher. More fear, right? Market capitulation, where it really rolls over. If we see S&P 500 down to 3,800, 3,600, 3,500, these are buying opportunities. This is the fear that we want others to have because that's going to allow us to buy in at these low prices that we couldn't buy a month or two ago when the S&P was at 4,400. So take it as an opportunity. That's how I got to look at it. So if you're somebody that's got maybe, $1,000, you want to start putting in the stock market, this looks like an opportunity to me. Now, it doesn't mean go put $1,000 in today into VOO. I would probably go and I'd put $100 in next week. And if it continues to fall, I'd put another $100 in. And I'd feel like I'm buying at a good spot because as we go lower and lower, I can buy more and more shares and I'll dollar cost average like I always do, and I might put a little more emphasis on it right now because, again, I'm buying it cheaper than I could before. And I have faith in the long term. It might be a year, it might be 2 years, it might be 5 years. That I leave this money alone in something like VOO, a good product like this, it's going to grow over time. So that's what I'm looking at doing. So the saying goes, be greedy when others are fearful. So that's what I'm looking to do. I'm trying to build a psychology around myself here so that when the market goes lower, I don't have fear. I look at it as opportunity, because time and time again, historically, it's shown us that it's going to come back. So I've got to have that belief long term. Hopefully you can buy into that too, because I know it can be quite overwhelming when you put in your $1,000 and you see a week later that it's $800 and you're like, oh, what could I have done with that extra $200? Why do I invest in the first place? So don't get caught up in all that. Build a good, strong wealth psychology. Understand that buying low is what you want to do. So the market goes lower, it's a buying opportunity. Doesn't matter what you did last week. If you bought a little bit earlier, you can buy again. So keep investing, keep looking forward. So if you like this type of content, please like and subscribe. If you have any questions at all, please ask down below. I really appreciate you watching. Take care. Have a great night. And keep investing.